Good morning, good evening, good afternoon. It depends on when and where you are watching this video from. Once again, my name is Kusu Isaac, and we are here to talk about Fibonacci. Okay, Fibonacci. So quickly, let's get the correct spelling down. Fibonacci. Fibonacci. So this is the two we are coming to talk about. The two we are coming to talk about. Okay, good. Okay, so what is Fibonacci? Or I think this is not the correct spelling. Okay, yes. What is Fibonacci or who is Fibonacci? Fibonacci is an Italian mathematician. Okay, so quickly let's go to Google. Let's go to Google together and search about Fibonacci. As I said, Fibonacci, let's read this together. Oh. Let's go here. Let's go here. This is what I'm looking for. Fibonacci, also known as Leonardo Fibonacci, Leonardo of Pisa, Leonardo of a lot of names, was an Italian mathematician from the Republic of Pisa, considered to be the most talented Western mathematician of the Middle Ages. Okay, so he was a mathematician. Okay, so his idea has been implemented in this trading system. Okay, so here is it. So I think in the trading view video, I show you how to plot it or how to bring these two out. So you go here, you go this area. This is where you see the Fibonacci. So now we know that in bullish market structure, this is how the market moves. This is how the market moves. Market moves like this. Good. Now, when the market is coming down, you are expecting to buy at these areas or these areas wherever you find a reasonable point or any reasonable or any tangible reason. Let me use this word, any tangible reason to get in at that area. Okay, we will talk about it later. Let's move on. We'll come back to it. Let's move on. Good. So now these two called Fibonacci. When you have yours like this, you have yours like this, you have yours like this. Yours may be not like this. Okay, so whatever yours is, just double click it and then do all the necessary settings, change all the colors to your preferred colors, and let's and design it the way you like. Okay, the background, you can change the colors. Okay, you can see me, I've switched off the background, I change the colors, everything. Okay, everything good. So we have numbers on the Fibonacci. Okay, we have numbers on the Fibonacci. We have the 0, we have the 0.23, we have the 0.38, 0.5, 0.18, 0.78, and then 1. Okay, these are the most important numbers. There are some numbers above, they're not important. When you plot it other ways, there will be numbers below. They are not very important. The important ones are the ones which are here. Okay, so we have this 50%. We have this 50% point. It is the equilibrium point. 0.5. Let me use 0.5. 0.5 equal to, let me use midpoint. That would be very, very familiar. Midpoint. So these are the most important. 0.5 is the midpoint. About 0.5, 0.5 is what we call the premium. Let's go. Below 0.5 is discount. So whenever you hear people say premium discount arrays, it is this thing they are talking about, okay? The Fibonacci numbers. Good. So these are the things we have to pen down or have to note it. 0.50 is midpoint. Above 0.5 is premium. Below 0.5 is premium. Now, these are the things you need to know again. Sell at premium. Sell at premium. 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 And then buy at discount. These are the things you know. Very, very important. Okay. So 0.5, the first one is 0.5. 0.5 is 0.5 is the midpoint. Okay. And the midpoint, we don't do anything. Don't do anything on the midpoint. Okay. Anything above 0.5 is premium. Anything below 0.5 is discount. Now we sell at premium and then we buy at discount. In normal business, when the prices are high, we don't buy. Okay, we don't buy. We wait for a discount, then we buy, and then we sell when the price is up. That is, we sell at premium. Okay, so anything above 0.5 is premium. That is where we sell. So we sell at 0.16 with another confluences. We don't just sell because the price has retraced or come back to 0.61, then immediately you sell. No, we have a lot of things we need to add up before you sell. The same thing, we don't wake up and then sell before the price because the price is at 0.786, but we add another reasons, okay, another reason before we sell. The same thing, okay. When we come to below here, that is the discount zone. We don't buy just because the price is at 0.382, but we add another point before we do so. Okay, we add another reasons before we do so. So we buy at 0.38, 0.23, 0.236, and then 0. So this is basically this is what you need to know about Fibonacci. Very, very simple and very, very powerful tool. Okay, so now let's go to the red market and see how we plot the Fibonacci and how we are going to use the Fibonacci. So this is, let me bring the watermark so that you can see that you can see the currency we are dealing with. This is GBP card in the weekly time frame. Okay, now let me go to the daily time frame. Weekly time frame is too high. Let me go to the daily time frame. Now, when you are about to use the Fibonacci, there are two things you need to ask yourself. One is the high of the trend and the low of the trend. High of the trend and the low of the trend. You can see that price pulled up here, found its high here, and then came here. Okay, came all the way down here. Okay, so now this is the current low we have. Okay, so in bearish trend we use only the premium. Okay, in bearish market structure we use only the premium, and in bullish market structure we use only the discount. Why? I've told you that we sell in premium. Also, we sell in bearish market structure. Okay, so that is why you need the premium numbers only in bearish market structure, and you need the discount numbers in bullish market structure, because in bullish market structure we buy. That is why you need the discount numbers on the Fibonacci. Okay, so you've noticed that we have the high here. The high is here correctly, and then the low is here. The low is here correctly. Good. So you take your Fibonacci, you plot from the high to the low. You are done. So this is a bearish market. Obviously, nobody should tell you this is a descending market, very, very bearish. Okay. So you wait for a pullback at 0.61 here. 0.61 or 0.786. I've told you we add another reasons of which we are going to talk about in the next videos, or the one. Okay, so right now you know that no, I want to bring some so that good price line so that you can see the price. You can see the price. See the price. Make the price line. Okay. So when you finish plotting your lines like this, when you finish plotting your Fibonacci and you notice the 0.6, 0.7 and the 1, you can just delete the Fibonacci, then high and low, so that you can make your chart clean. So you know that this place is 0.61 Fibonacci. Make it blue. This line is 0.61 Fibonacci, and this line is 0.78 Fibonacci. Okay, you know that this line is 0.78 Fibonacci. Good. And this line here, this is where we put the stop loss. Okay, this is where we put the stop loss, so you can ignore the labeling of this line. This is where you put the stop loss. So you wait for price to do something like this, do something like this, do something like this, touch here, and then it will drop. Okay, wait for price to pull back here. Sometimes they go to 0.78 and then drop nicely. So this is how to trade it. If you want to trade it without any analysis or adding any analysis, you just place your stop loss above the 100 or the 1, okay, and then you take profit to where you want to take your profit based on your analysis. Okay, so basically this is how to use the Fibonacci on a bearish market. Okay, on a bearish market. Now let's go and find a bullish market and see how best we can use the Fibonacci, and see how best we can use the Fibonacci. See how best we can use the Fibonacci. Which pair was very, very, very bullish. Okay, so let's go and find different pair. Different pair. Let me see my bullish pairs. Bitcoin, Euro GBP, Euro GBP was bullish. Good. Euro GBP is a bullish pair. I've done analysis on it. Okay, so let's go to 4 time frame. let's go to 4-hour time frame. So let me delete it so that you guys will concentrate. Good. So obviously we can see that Euro GBP in the 4-hour is very bullish. Okay, it's extremely bullish. Good. So what do we have to do? Since this pair is bullish, we wait and buy at a discount zone. Okay, you don't buy here, it's very expensive. You don't buy here, you will lose. Okay, so you plot your Fibonacci from the high. No, let's ask the questions first. Where are the high and the lows? This is the low of the trend. This is the low of the trend. This is the low. This is the low of the trend. See, it is low of the trend. And this here, this nigga here, is the high of the trend. Okay. It can create another high. So when it creates another high, you move your high to the next high it has created. Forex is dynamic. You need to be very adjustable to any situation. Okay. You trade what you see, not what you think. Okay. You trade what you see, not what you think. And you think price is dropping and it didn't come, it form another pattern or give another opportunity. You get in. Okay. So if it forms, it didn't come to our discount and form another high, we move the high to the high that it has formed. Okay. So, but currently, this is what we see. This is the current high, and this is the current low of the trend. Good. Current low of the trend. Nice one. Nice one. Nice one. Okay, so let's move on. So you plot it from the high to the low. Nice one. And then you wait for this count. I've told you that 0.50 is midpoint, and we don't do anything at the midpoint. So we wait for this count. Wait for price to come here or here. Okay, wait for price to come here or here. Good. So this is what you have to do. Wait for price, pull back, come here, then goes up. Okay, so this is where you would buy, then move up. Okay, then it move up. So this is how to use the Fibonacci tool. And I've told you, we don't just wake up and then use the Fibonacci tool blindly. There are things you need to add up before you can do it, of which that is will be taught in the order block theory. Okay, so everything you've learned from the beginning, the market structure, liquidity, and this Fibonacci, we are going to apply everything in the order block theory, because the order block is where we are going to take the trade. Okay, so this is where we end the Fibonacci. Very simple and very powerful. Just watch the video at least 2 times and then grab everything I've taught in the video. Thank you very much, and then see you with the next video.